Hey everyone, welcome back to Corporate Decoder, the place where we take those complicated company reports and turn them into something you can actually understand. Today, we're diving into a filing from TFS Financial Corporation. And believe me, it involves a lot more than just keeping your saving in faith. It involves waiving dividends and shareholders being very agreeable. You'll see. In short, this report is about a vote that happened at a special meeting where members of a mutual holding company agreed to let TFS Financial Corporation skip some dividend payments. This could mean more money for the company to use in other ways, but it also means those shareholders won't be getting that dividend money. But before we get started analysing it, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we can analyse stocks together. First off, this report is dated July 8, 2025. This is important because it tells us when all of this information was made official. This is a current report, also called an 8K filing, meaning it's reporting a significant event that shareholders should know about. Alright, let's get to the meat of the matter. Under other events, we learn that there was a special meeting of members of Third Federal Savings and Loan Association of Cleveland, MHC. This is a mutual holding company and it's connected to TFS Financial Corporation, which is the company we're really interested in. So who are these members? They're depositors, meaning people who have savings accounts, and certain loan customers of Third Federal Savings and Loan Association of Cleveland. Basically, people who use the bank. These members got to vote on something important, a proposed waiver of dividends. A waiver is like giving up your right to something, in this case dividend payments. Dividends are payments companies sometimes make to their shareholders, sharing some of their profits. This waiver is for dividends that could add up to $1.13 per share of stock. That's the amount they could earn for each share they own over the next 12 months from July 8, 2026. Now, how did the vote go? It turns out that 59% of the total eligible votes were cast, and of those votes, a whopping 97% were in favour of the proposal to waive the dividends. That's a pretty strong approval. Here is some context. The MHC is the 81% majority shareholder of the company, and so can essentially decide to do a thing or not to do it. Even though the members voted yes, there's still one more step. The MHC will be asking the Federal Reserve Bank of Cleveland if they have any objections to these dividend waivers. It's like asking for permission from the financial police. The report is clear that they aren't sure when they will receive a non-objection from the Federal Reserve Bank, or even if the non-objection will happen. The report was signed by Meredith S. Weil, who's the Chief Financial Officer for TFS Financial Corporation. Now, let's zoom out a bit and look at what this all means. So, why would a company want to waive dividends? Well, it could be a way to save money, freeing up cash for other investments or to cover expenses. It could also be a sign that the company wants to reinvest profits back into the business to grow faster. On the other hand, it can affect its stock price or at least investor perception of it. In this case, keep in mind the MHC already owns a big chunk of the company, so they might see this as a way to strengthen the company and increase the value of their investment in the long run, even if it means giving up some short-term income from dividends. Another point is that the result was 97% in favour, suggesting that the common voices aligned with what the majority shareholder wanted to do with their investments. Now for my take on TFS Financial Corporation. Looking at these results more broadly, the company seems to be making a strategic move. Waiving dividends is likely aimed at boosting its financial flexibility, allowing it to invest in growth opportunities, or navigate potential challenges. The overwhelming approval from members of Third Federal Savings and Loan Association of Cleveland's mutual holding company suggests a shared vision for the company's future. However, there are risks to consider. While reinvesting in the business can drive long-term growth, it also means shareholders won't receive dividend payments in the short term, which could disappoint some investors. The need for approval from the Federal Reserve Bank adds another layer of uncertainty, as the timing and outcome of this review are unknown. Investors should pay close attention to how TFS Financial Corporation utilizes these funds and whether it translates into improved financial performance. Overall, TFS Financial Corporation appears to be making a calculated decision to prioritize long-term growth over immediate shareholder payouts. Whether this strategy pays off remains to be seen, but it's a move worth watching closely. Alright, that's our breakdown of TFS Financial Corporation's latest filing to the SEC. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.